What's up, traders? My name is Layla and welcome back to this week's no-nonsense stock market recap from Bullish Bear. This week brought no shortage of drama, kicking off with a US government shutdown that rattled investors and sent shockwaves through the economy. Treasury Secretary Scott Bessent warned the funding lapse could slow growth, drag down GDP, and hurt working Americans, calling it not the way to have a discussion. The shutdown even delayed key economic reports like September jobs data and weekly jobless claims, leaving everyone guessing about the health and labor market as ADP's private sector numbers showed signs of cooling. Still, markets powered ahead. The S&P 500 broke above 6,700 for the first time ever, while gold hit record highs above $3,800 an ounce, silver climbed toward levels not seen since 1980, and Bitcoin pushed closer to $120,000. That's a clear signal investors were hedging their bets with both traditional and digital safe haven assets. Corporate headlines were just as bold. Tesla crushed Q3 delivery expectations with a record of 497,099 vehicles as buyers rushed to cash in on the $7,500 federal EV tax credit before it expired. Nike's first quarter earnings beat forecasts with $11.72 billion in revenue and EPS of 49 cents versus a 27-cent consensus. Though profits fell 31% as tariffs and inventory cleanups weighed on margins. In one of the week's biggest shakeups, Berkshire Hathaway announced a $9.7 billion deal to acquire Occidental Petroleum's chemical arm, OxyChem. This is potentially Warren Buffett's last blockbuster deal before passing the CEO torch to Craig Abel, while he continues to oversee Berkshire's massive $344 billion cash pile. Pfizer scored a 3-year break from new pharmaceutical tariffs under the Trump administration and announced a $70 billion investment in U.S. research, development, and manufacturing. This solidified its place as a key partner in domestic drug production. Tech and AI once again were under the spotlight. OpenAI's valuation skyrocketed to $500 billion after an employee share sale, and Nvidia notched to new record highs. Apple shifted gears, pausing its Vision Pro overhaul to focus on smart glasses in a bid to challenge Meta. And Intel is reportedly in talks to bring AMD on as a foundry customer, while CoreWeave shares jumped after inking a $14.2 billion deal with Meta. The big names are what kept the momentum going. Electronic Arts announced a stunning $55 billion privatization, ending its 36-year run as a public company. Alibaba surged to its highest levels since 2021 thanks to bullish analyst calls and a massive new AI infrastructure plan alongside Nvidia. Meanwhile, Spotify confirmed a CEO transition, Robinhood's prediction market surpassed 4 billion contracts, Fubo got the green light to merge with Hulu Live TV, and Yahoo moved closer to selling AOL to Italy's Bending Spoons for $1.4 billion. On the economic front, signals were mixed. U.S. consumer confidence slipped in September as inflation and job concerns weighed on households, but pending home sales in August surprised to the upside with a 4% jump. Hiring plans through September dropped to their lowest since 2009. In commodities, WTI crude hovered near a 4-month low amid oversupply fears and OPEC Plus expectations, while Treasury yields rose and the U.S. dollar strengthened. In the end, this week was defined by the shockwaves of the government shutdown and the market's resilience in the face of it. The big question now is, can the momentum from September carry into the final quarter of 2025 despite all of this uncertainty? For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more stock market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.